The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
This is Tuesday, the 7th of March. We're looking at the S&P E-mini futures down 29.50. So this is very interesting. This is a 10-minute chart based using Chapman wave notations. Whoops, let me just get this right here. There's a lot of activity going on. This is a little slow. It's usually not slow. Okay. Now what we're looking at is, if I can grab that left side window edge. Yeah, so there was a beautiful arch formation going to, that was 10 o'clock. That was basically yesterday. We went up to the arch peak F and made a left side, right side price time match, came back down. And then look at this, how long we went to this rectangle formation, long rectangle formation from about, we can call it 8:30 last night, between 40.63 and basically 40.46. And we went into this wind peak A, peak B, peak C1, C2, pulls back, finally makes a D. I had drawn in a left side, right side price time match, and I put the X in there. Did I know that it's a 10-minute bar, that 10 minutes earlier there'd be the smash to the downside? No, I didn't know that. But I did think it would be tested, and that was at 40.46. Now we're at 40.19 with selling still going on. Now, within the context of what's happened here, so now I can just, I wanted to show you this, to show you how speed is so imperative in this particular market. You've got speed where there's a lack of speed and speed where there's drama. A lack of speed is this whole thing between 40.64 and 40.46, just for hours and hours trading within that band. And then whoosh, this is the whoosh we had to the upside. That was Wednesday. Was that Wednesday, a week ago when we went long? Yeah, that's when we went long. The Dow, the 3 times long Dow, taking quite a little bits off because just part of money management. But as I'm looking at this, I still see enough momentum in the buyers to say they can step aside for a moment, and I can see some selling. And I had the choice this morning. We could have gotten the short side of the S&P, and I decided, well, let's just treat it as a watch at this particular time. We're not going to do anything. I want to see how the day plays out. We knew that Powell is going to talk about longer and more. I mean, what else could he do if he's got a 2% target and we're in the 4s and 5s? It's going to take a while. A lot of things are going on here, and we're going to talk about that in a moment. But what I wanted to show you is that in the Chapman wave methodology, we're always looking for, if I can find it, here we go. I'm going to go right there. Okay. So in the techniques that I use, a whole myriad of techniques, but the basic technique that I discovered decades and decades ago was if you can identify a low bar by various methods, and then count each successively higher peak, and then alphabetize them in sequence, peak A, the next one's peak B, the next higher high is peak C, peak D, E, F, and G. But it's the idea of getting from a buy signal to a buy mode, which says there should be a D, a fourth highest peak. If you get a buy mode, that's number one. And number two is at that D, other things can happen. It can recycle to a brand new buy signal to buy mode. It can drop sharply. That's where you need to have a little bit of caution. So here we go. We're looking at the dollar. There's no other way to count it. It went to a peak A, then a peak B, goes over that, stalled at the 200-period moving average. It's hugging the 200-period moving average. It went above it to peak C, comes back and uses it as a sine wave, up and down, you yo-yo, and now it's trying its best to break above it. And I suspect in the next couple of days, and that might be why gold is, in the next couple of days, we will get to the 105. I always forget this. I should type it. I'm going to type it in now. 105.36, 105.37, 105.36, and it's gray because it's not, it's just subsidiary, because I am anticipating at some point, we are long the dollar. I'm anticipating that we're going to get a leg D to the upside, and it probably could be in this time frame, we'll see. But even more important than that is that if you're looking at the EUR USD, this is the euro-dollar currency pair. I just typed it on the chart instead of in the little box there. EUR USD. Look at that pullback. That's a sharp pullback. And at peak A was okay, but the technicals were still kind of improving, but still weak. And the 200-period moving average of 1.05 is very 1.053 is very strong, a magnet still. And that's this 200-period exponential moving average. Now look at the opposite. Look at the USD JPY. This is the yen currency pair. This is still acting well, and there's a chance that you've got yourself, excuse me, Chapman wave instant restart. That suggests that you could go to higher highs, but because after D you went to a higher high in a very complex way, it says there's a chance that even though you're going to go to higher highs, and this is the same thing with the dollar, because I think the dollar is going to move higher in the shorter term, but I think just in the short to intermediate term, in other words, I'm talking about 3 to 6 weeks, I wouldn't be surprised if the dollar actually starts to pull back and the US dollar, Japanese yen, the yen starts to pull back. Even if we go to a higher high here, I think that there's a good chance that we're coming back to test the 134s, and here we are at 136.73, up 0.82. Okay, I've got that. Now I want you to show you something else. Look, high-grade copper. High-grade copper was acting well, but my contention was that copper is doing well, but it's in a trading band. And that trading band is going to be challenged. And one of the reasons why I thought it would be challenged is that even though you saw copper stocks like FCX doing very nicely, when you look at that, look at them in the weekly and the monthly chart, Freeport McMoran is kind of struggling here in the sense that it hasn't been able to break from that big move up into the 46 area and then plummet down to the 39s. This has been a little tough. So the trajectory looking out is positive, but just on the shorter term, it's having a little bit of a problem. Looking at SCCO, that's a different chart altogether. It's not quite as complex as Southern Copper is not as complex as Freeport McMoran, which I think has many other things. So this one is acting way better. So when I look at the big picture, it says to me that you cannot rule out that the activity in copper internationally is a good sign. It's an improving sign, and that's something to respect. And if you're looking at, let me just go to this as well, put it into the context of, let's go to gold.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no cash or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
The volatility index, the VIX index, it is running. It's up 46 cents, 47 cents at 19.08. So not a big move up. It's the kind of move you'd expect. Actually, no, I would say that I would expect a slightly higher one. We did touch 1927. I would have expected that would be holding there. Days, yeah, so we're going to see how this pans out. But with Powell giving a warning, it's a warning, but it's kind of what we've been expecting. Why? I mean, we knew that he was talking about higher rates, and we knew that he was talking about longer. So I don't know what the market is anticipating. I think there's something else going on in the market. This is just a digestive phase after. Look at this. The Dow just went 1,000 points higher. It went from 32,500 to 32,500s. And now it's trading at 33,200. I see 33,200 should be the support we're watching today. If it goes underneath that, then I have to say, okay, this is a one-time thing. We've got to be careful that we don't suddenly reverse and have that Eiffel Tower straight up, straight down from a peak A failure. I'm not sure that that's going to happen. I think, and let me just go to bonds. TLT, remember 99 was the area that we were looking at the other day as a left side, right side price time test. It came in a day late, but it did it, and it ran up. It ran up to the 101s, almost touched 102. No, it did, touched 102. So let's see where this goes in the next 2 days. That's all. Because if we break under 99, wow, yields are definitely going to go higher. Look at this, TNX.X. There we go. The TNX is trading, made a peak D. Remember, D is what we objective in the Chapman wave buy mode, a minimum of 4 higher peaks. It went to that once before. It went to that in January in about the 38, 39 area, pulls back to 33. And then what does it do? It spirals up to the 40.87. Is that correct? Is that the number that we're looking at? 40.91. and it hits the 14-period moving average on the down move. The 9 is still way above the 14, and that's just saying that yields so far, all the technicals are still good. Even the stochastics at 81%, above 80%. The MACD is starting to dip down. Let's see, the relative strength is starting to weaken. I'll be watching this very closely. But what I am looking at here that is very important is if you are looking at the TBT, and that's okay, TBT made that peak D, has pulled back some, and it's still way underneath. This is the ultra-short Lehman 20-year Treasury bond ETF. It went to the 39s back in October of last year. Then it went down to the 26s. And now here it is, having gone to 32 twice already. It's in the 31. So I'm going to be watching all of these things very closely. But I don't know if I should say my gut feeling. I don't want to trade on my gut feeling. My analysis, based on the different aspects that I'm looking at, is just saying that there's a lot of nervousness here, and the market actually is held extremely well under these conditions. So I would not be surprised if this is a nervous sell-off. But what happens between Thursday and Friday? If Friday at 4 o'clock, now let's just go through this, because this is the only way I can look at it, is to give myself numbers that I need to look at. If on Friday we don't have to make a new recovery high of 33,572, I may as well just type that in, 33,572, that was yesterday's high. That's quite something, 33,572 down to today's low of 33,206. That's 370 points. That's a big move down. So let me get that right. There you go. Okay. So I want to see today's high, which is 33,453. I want to see it at least tested. And I'd prefer if it's tested. Today's only Tuesday. I'm going to give it until Thursday. I don't want to give it all the way to Friday, because by Friday, I want to see it testing yesterday's high of 33,572. Now, that might be very optimistic, but speed is of the essence here. If the move that I'm looking at here, this move to the upside, the MACD was almost about to cross positive, but it didn't. Look at the way the histogram has moved so nicely to the upside with the price. The stochastic's been the laggard. I'm upset. If the stochastic was at 76% right now, I'd say, no way, we are going higher. Right now, I mean higher immediately, it means by tomorrow. But this says we could stall a little bit. You know, I've got my rule of 136, meaning I love when there's, on the way up or down, there's just one bar rest, and then you go to the next move in the same direction, maybe 3 bars. But when it gets to 6, it means you almost have to restart. It actually turns out to be a positive thing in the end, but it does mean that you're almost like a brand new buy signal. So this is very important. We hit a low today of 33,206. We're over 120 points above that right now. I like the action. We're waiting for declines to buy, to add to our positions. I'm going to just say that within the context of shorting, yes, I did see some stocks that looked really intriguing in terms of the short side. I just don't think this is, I just don't want to be in that category right now. I'm just not looking at, I could change my mind by tomorrow or the next day, but at this particular point, I just don't see it. I think there are a lot of buyers lurking out there, and those buyers are, all I can say is that within the context of the market itself, those buyers seem to have more weight than the sellers. That's just the way I'm looking at it. And also, it's extremely selective. The selectivity is really my choice of medium right now, because I'm looking at, there was a comment made a little earlier on this morning to say, I'm seeing a lot of small caps, these penny stocks rallying, and when that happens, it's usually not a good sign. I kind of agree with that. But when I'm seeing so many stocks in the single digits that are comparable in chart formation to some of the same stocks in the same category that are at 130 or 230 or 330, I'm saying to myself, I think that fund managers are starting to buy in a very different way right now. In fact, it looks to me like fund managers are starting to put a lot more money to work. That's number one. And look at this. I noticed this morning. Look at MS. This is Morgan Stanley Financial. Look how well it's done. Makes an all-time high of 109.73 in February of 2022. Drops to 72. That's only 38. Maybe let's go to even 40%. 40%, and now it's all the way back to 97. I have to tell you something. Let me just look at Robinhood. It's a different category, but even Robinhood, which is way down in the doldrums, at least has come off the low of in the 7s, spikes to the 11s, and is trading now at 9. I think the public is in this market. That's usually, that could be a negative thing.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
In terms of candles I use, I only have a few candles. My own makeup. That's the candle itself. And one is this inverted. First of all, I like to use doji candles. I have a whole methodology with them, long-legged doji, small-legged doji, etc. But in this particular case, look, this inverted Chapman wave Roman candle, a green one, has a long wick to the upside here, and halfway is the body with a tiny little wick at the bottom. And that just says to me that if there is a move, it's a 10-minute chart, but if there's a move that lasts, I would take all the way to 3 minutes, about 4,027 in the 10-minute chart of the E-mini, then there's a really good chance it's going to try to test the little bounce that it had earlier that went to 4,031.50 and even go higher. If, in fact, in the next, and this is the bar that we're looking at right now, within 2 bars, it needs to do something like that. But if, in fact, it takes out the low, which is at 4,015.50, be careful because it's liable to test the low. But I think it's going to move up. I like it, the action very much. Oh, I didn't finish this chart here. So, it's too late. All right, well, it doesn't matter. As I said, I like the action that I'm looking at right now. I think we're going to go higher in the E-mini. So gold, silver, we did that. High-grade copper, we did. I needed to do a platinum I haven't looked at for a little while. Platinum looks like gold is starting to pull back quite sharply. It'd make a peak E in the weekly chart. It isn't as lousy looking as a gold right now, but it is down sharply, down 4.15% at 938. I wanted to show you this. Wheat made a peak D. Remember, we was looking at the peak Ds, and I was interviewed by Larry Pesavento. I think he was sitting in that afternoon for Tom O'Brien and Tom O'Brien's show, and I was about to talk to him about this, and I just didn't. But the very next morning, I did that on my show, and I said, I had a peak D. There was a peak D, the 4th highest peak in the Chapman methodology. That's where you got to be a little careful, and then you got to monitor it to see you don't turn down sharply. Well, it did that back in January from a peak D, and then it made a cup formation. It did a beautiful left side, right side symmetry with that midpoint there, the fulcrum, the plumb line of that bar right there, about the 23rd. It went to a higher high, but it didn't go above the left side peak D. It did go to a leg D, then a peak D, and turn down. And that was the bar that I was saying. I think that now we've got a downturn in the wheat. This is the continuous contract, and one of the reasons is that the technicals were starting to turn down in the MACD, although they were much better than they were before, but the stochastic was much weaker. On balance volume was weaker, and that I expected to pull back. Well, we got this pullback all the way from the 800 and about 812 area in the continuous contract, hit what was the low today, 689, and now we're trading at 700. This is a very important moment because if the wheat in the next week and a half, I go all the way to Friday a week. This is Friday a week. If it hasn't tested 732, the black 14-period exponential moving average, what is that? No, 726, and it's trading at 700 right now. Within the next week and a half, wow, this could go quite a lot lower. And there's your deflationary aspect. Look at this. Soybeans, same thing. It was moving up, but it didn't make that peak E that was made in the back, I think it was May or June, so maybe June of 2022. Yeah, June, the week of the 10th at 1587. This is the continuous contract. 1597, sorry, and it plummeted all the way to the 1300 level, and now it's just working its way steadily. I remember I spoke about this. I said this little inside weekly chart of wheat, of soybean, looks like Alta monthly chart, where it took every single opportunity to make a new high. 1 month rest, then it was on the way. 2 months maybe, and then it just kept going. And I said, that's a very unusual thing, but it's also very positive because it says every pullback has been bought. But now you're starting to see a little arching over. So it's really important that the continuous contract of soybean, which made a peak C1, C2 top back around about the 21st of Feb, and then a sharp pullback to the 1470s, is now trading at 1520, and it needs very quickly to get to 1548, 1555. The monthly chart is still walking very nicely, walking the 9-period moving average. And corn, here we go. Corn had a big pullback. And that's really interesting because within the context of corn and wheat and soybean, you've only got soybean, which is acting on the way up quite nicely. These other two are pulling back. And if you're looking at soybean, I always do that, sugar is making higher highs. And that's why the DB Agricultural Fund, which we are still long, is still doing very nicely. And it's just gone to a leg leg D, a peak D and a leg D, a peak D right there and a leg E as we speak. And that's really nice. So this is at a new, I can't say whether it's a multi-year high yet. Oh, yeah. Look at that. Once upon a time it was up in the 25s, plunges down to the 7s. That was back in 2016. And now it's had the second buy mode. Yeah, it's acting very nicely. It's moving higher. So sugar is in demand. There's no question about that. All right. So I wanted to just show you some of those. And now we can go to some of the stocks. So Tesla, I had a question about where did it go? Tesla. Oh, just an analysis of Tesla. Yeah, I said that Tesla's stuck in a range right now. The magnet of the 200-period moving average of 213 is there, but it's at 191. It's down almost 3. The further it moves away, if it takes out 180, I think I said this yesterday, if it starts to trade under 180, then I think it's going to go down deeper. But right now, it's just a sideways consolidation of a spectacular move from the 100 area to the 220, a double. Very nice. Okay, now I needed to do this. Quite regular trading stock. Let's see. Alta reports on Thursday. Thank you very much. This is going to be very interesting. Let me take a moment just to talk about Ulta Beauty. My contention, having watched this was what is the way EW was it? No, this is. No, I'm trying to think of it. EL, must be EL. Estee Lauder. Yeah, this is fragrances, creams, etc. Estee Lauder. It's a different category altogether, but the pure beauty, like Ulta Beauty, my contention has always been over the decades, that just my experience is that it's the last to go when if there are real bad times, either there's inflation or whatever it is, if there's a recession, this is the last to go. This is the last thing people are going to give up, is their beauty products. And look at this. We had the high that was made at 537.82 with a round number open at 532 on the 23rd of February. It then pulled back pretty sharply when you think about it. It doesn't do that very often, to the 510 level. That's only 20-something points, but still, it's a 5% pullback. And now it's trying to rally, but it hasn't made a new recovery high, or an all-time high, in fact. So, and look at the weekly chart. Also, everything there is fantastic. I'm going to be watching this closely. I at 525, there are better ways of putting that kind of money.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi everyone, we're back. Basil, Chapman, Dow's down 173. So this pattern that we're looking at did go to a peak D. This is in the 1 minute chart. Look at that. And now it's pulling back. Now, we had a second Chapman wave Roman candle right here. It's not exactly I prefer if it has just the tiniest little wick. This wick is a tad too big. But now it's a second one. So it's kind of lost all its focus. And now it could take much longer. But at any point in the next hour, if there is a move, this is a 10-minute chart, if there is a move that holds about 4,035 in the E-mini, then 4,038 becomes the next target. Once it gets there, then we can start to look at this whole candle, the ugly candle of 10 o'clock. I'm inclined to think that there'll still be a lot of digestive phase going on, and that's the digestive phase from Wednesday's low all the way to the high of yesterday, and I'm just treating it that way. That it's part of it. Nothing here is really very new. Yes, if Powell makes a really big deal about what we knew he was going to say. I mean, we knew that he was going to talk. He's spoken about 2%. He's spoken about time. He's spoken about everything. But I'm not being sanguine. I'm not saying, oh, everything's great. I'm saying the market, for me, from what I'm looking at, even now, the areas that I'm looking at that are very important have not pulled back very much at all, down a few cents rather than dollars. And that, to me, says fund managers are still being very specific in what they want. And I think that that's important. That's really the point I'm making here. FXI, let me just change it from here. I want you to look at the, here we go, FXI. So, yes, I do expect that not necessarily the low that was made just a little while ago will be tested, but we will get down. We'll get down towards those lows, because I think that this is just part of the oversold condition that we reached. Overbought condition. So what I want you to say is FXI, and all of this is part of the plan here of looking at, this is my plan of looking just very broadly right across the spectrum. And what I had said was back in late January, early February, that the rally that I saw in the iShares China Large Cap ETF, together with it's trading right now down 39 cents at 28.89, I thought that wasn't necessarily a one-off in the sense that it was there and that was it. But I think that the pullback after that, I was expecting a lot sharper than just a little bit of a pullback. And we've got that. We've got a pretty sharp pullback from the 33s down to the 27s, trading right now at 28.90. And we're also looking at Baba, which is Alibaba. You remember that one had a fabulous rally off the lows in the 50s and went to 120, peak F. And now it's turned down, it's trading at 89. I think that this is different. The whole Chinese aspect is very different. And that's another reason why I'm I can't say that Now we can exclude China because it's going to become more U.S.-centric. But I think there is a little bit more of a bias now to focus more on the American side, because we've now got some kind of rally in the very beaten down stocks like the favorite NASDAQ type stocks running off the January low. And now they're taking a digestive phase. So this is the SLX. I spoke about it yesterday. I don't know whether there's an alternate count yet, a G or an A. A G says, wow, be really careful because you can pull back here. And A says, are you kidding? Every pullback should be bought. I don't like when you say, oh, I should either buy or sell. But what I am saying is that it's rallied very nicely to a new recovery high. 70.43 was the high back in April. In the weekly chart, you can see it right there. Look, there it is. 40. This is 70.43. That's right there. And look what happened. We just ran to 70.43 was the last high. 70.38 is this high. We're talking about 8 months, right? And look at this. It's amazing. How does this happen? It goes all the way down to the 46 level and then comes back and goes within pennies. And that to me is a sense in the market of familiarity. So when look at this, the TLT, 99 goes all the way down to 99. That was the week of the 27th of January. Spirals up to the 108, 109 area, comes back down, and was a test. It tests the 99s. So these patterns, to me, are telling us that within the context of all the talk, there are patterns that repeat over and over again. And if you can identify them, it really is a help. And that's what I found. So within that context, I had a couple of questions. One was, BKNG. BKNG, isn't that booking.com or something? Yeah, Booking Holdings, Inc., online travel company. I haven't done I've done the weekly chart. Leg E, huge move from under 1,600, now trading at 26, up 1,000 points. And look at the weekly chart. And this is just telling us that's what I'm saying selectively. Look at this. The all-time high, if I can read it, is 24.20. All right? Oops, no, 27.15. Back in February of last year. So this is just over a year. In that time, it's gone down to the 1600s. To be exact, it's gone to 1616. And now it's come all the way back to today's high of 26.30. 26.30, and I said 27.15, did I say it? Yep, 27.15. That's incredible. And that's really impressive. And if I do it on the daily chart, where am I going to do it from? That looks to me like it's all finishing up A, B, C, D, E. Yeah, this looks like a brand new. So I'm just going to put this in here. I'll do this quickly. Look, here we go. From this low that was made around about the 26th of December, you've got peak A, huge leg up. This is peak B. I believe it's by a fraction. So let's just check it out. There it is. 2222.52, 2220.96. Okay, that's peak B. Yes, peak C. All I'm doing is counting the alphabet sequentially. Nothing to do other than that. And then this turns out to be a Chapman instant restart. Huge move, but it's an instant restart because with the 3 bars, it goes to a higher high. That becomes E/A. That's all you have to do is say, hey, that's really good action. It's a powerful move. It can go much higher. So that's E/A right there, E. And now it becomes F. And when you get to a G, you always say G/C, and it should go to a D. G/C, and lo and behold, the very next bar after the rest becomes D. Okay, now where are we? And it spikes higher. Now, does this just continue because the 9 is still over the 14 and looks really strong? Well, the MACD tumbled There's a nice divergence. Stochastic pull back sharply. Well, all I like to do is to go E, continue the alphabet, F, and go again. Slash C. Excellent action. Down $6 today.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges at which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. Yeah, we're back and we're going to get the countdown. And 200 level to hold. And I just want to hear this. So let me see. Oh, wait a minute. I just need to hear some of the sound. It's still bad, huh? All right, today I'll have to work on some of that because I got an interview with Tom later on today. So we'll get that right. So what we're looking at is we've retested the lows. How's that going to hold? Remember that the second Roman candle that has two bars. We've used up that bar. We've gone below the low. So that just says now you can start to expect choppiness, and you're kind of stuck between 40.30 and 40.08 at this particular point. That's the range I'm looking at. So a couple of things I want to look at in this last segment. Stocks like Booking Holdings, doing very nicely, and I saw a couple of others that were in the travel. So travel is doing a lot better. Also, if you're looking at within different sectors, so the XLC, we looked at that recently, and that is the communication service area. I'm watching this very closely because it's sitting on the 200-period moving average. It did act really well. It went from the 45s up to 60, and now it's pulled back. That's, to me, I'd like to see some positive action there. But the XLF, and I was asked about this, the XLF is the financials, S&P Select Financial Spider Fund. I must say that looking out, that is weeks going into, say, April, I want to see the XLF rally. I don't like this action, this kind of sideways action.